First up, the Trump administration is signaling a major breakthrough in the saga surrounding TikTok. We're talking a deal that's reportedly close to being finalized, with tech titans like Oracle and Silver Lake poised to make significant investments. This isn't just about an app, it's a pivotal moment in global tech policy. Then, hold onto your hats as we look at Oracle itself. The enterprise software giant is undergoing a massive leadership shakeup. Safra Catz is stepping down from the CEO role, making way for a dynamic co-CEO duo. This is happening at a critical time, especially with Oracle's big AI push and that massive deal with OpenAI. And speaking of co-CEOs, Oracle isn't alone. We're seeing a growing trend of dual leadership structures popping up across major industries, from streaming giants like Netflix to investment powerhouses like KKR. What's driving this shift, and who else is embracing the co-CEO model? Finally, we circle back to TikTok and the Trump administration's latest move. Oracle is set to oversee a U.S. version of the TikTok algorithm, a crucial element designed to prevent a ban and ensure data security. It's a complex dance of politics, technology, and international relations. Stick around for all the details and make sure you're subscribed and have that notification bell on. Trump team says TikTok deal close, with Oracle and Silver Lake set to invest. This is huge. The long-awaited saga of TikTok's U.S. operations might finally be nearing a resolution, and it's poised to be a landmark deal. President Trump is expected to announce that a transaction involving TikTok's U.S. assets meets the stringent requirements of the 2024 legislation, effectively preventing a ban and reshaping the social media landscape. This isn't just a corporate shuffle. It's a high-stakes play at the intersection of global politics, technology, and data security. The core of this agreement lies in a significant shift in ownership. ByteDance, TikTok's Chinese parent company, will retain a minority stake of less than 20% in the new U.S. entity. The majority ownership will be split between existing global investors and new American partners, prominently featuring tech giant Oracle and private equity firm Silver Lake. There are even whispers of interest from influential figures like Larry Ellison, Michael Dell, and Lachlan Murdoch, signaling a deep level of commitment from the U.S. business community. Security has been the paramount concern, and this deal addresses it head-on. All U.S. user data will be stored on Oracle's cloud servers within the United States, directly mitigating fears that personal information could be accessed by Chinese authorities. This move aims to reassure regulators and the global community by entrusting data management to a trusted American tech firm. President Trump has placed a 120-day moratorium on the divestiture order, a strategic move to balance congressional demands with the practicalities of a platform used by 170 million Americans. This deadline creates a crucial window for ByteDance and its stakeholders to finalize the complex negotiations. The implications extend far beyond TikTok, potentially easing U.S.-China trade and technology tensions. It's a critical development in the ongoing debate about Chinese ownership of major online platforms, which U.S. officials view as an economic and national security risk. The deal guarantees continuity for users, ensuring TikTok remains a vibrant part of online life. However, it also underscores how social media platforms have become strategic assets in the eyes of governments worldwide. Don't go anywhere, because the ramifications of this deal are still unfolding, and we've got more breaking tech news coming up. Next, we're diving into a major leadership shakeup at Oracle itself. Oracle leadership shakeup comes at the right moment as Safra Catz makes way for co-CEOs. Get ready for a seismic shift at Oracle. In a move that's sending ripples through the tech world, CEO Safra Catz is stepping down, handing the reins to a powerful new co-CEO structure. This isn't just a change in leadership. It's a strategic pivot for Oracle at a moment when artificial intelligence is dominating the conversation, and the company is riding an incredible wave of growth, highlighted by a staggering $455 billion in uncounted sales and a stock surge of 85% this year alone. The new co-CEOs are Clay Magouyrk, formerly president of Oracle Cloud Infrastructure, OCI, and Mike Sicilia, who led Oracle Industries. Their appointments are laser-focused on supercharging Oracle's AI strategy. Magowiak brings deep expertise from managing Oracle's massive cloud infrastructure, while Cecilia has been instrumental in modernizing the company's industry-specific applications with cutting-edge AI. This dual leadership aims to drive innovation and capture the immense opportunities in the AI era. Chairman and CTO Larry Ellison emphasized the right moment for this transition, praising Katz's leadership in transforming Oracle into a hyperscale cloud powerhouse. Katz, a formidable figure in tech, will transition to executive vice chair of the board, continuing her influential partnership with Ellison. This move ensures continuity while empowering the next generation of leaders. Analysts are largely optimistic, viewing the promotions of Magowiak and Cecilia as a solid endorsement of Oracle's core growth drivers, its cloud and industry businesses. The consensus is that with Ellison and Katz providing strategic guidance, the transition is expected to be smooth, expanding the company's leadership breadth and reinforcing its business discipline. But what does this mean for the broader corporate world? Is Oracle pioneering a new leadership trend? Stay tuned as we explore the rise of the co-CEO model across major industries. Oracle to Netflix, co-CEO structures gain traction across industries. Oracle's bold move to a co-CEO structure isn't an isolated incident. It's part of a growing global trend. As enterprise software giant Oracle appoints Clay Magowiak and Mike Cecilia to lead the company, they join an elite group of major firms embracing dual leadership. This model, once unconventional, is proving to be an effective strategy for navigating the complexities of today's fast-paced industries. Look at Netflix, where Ted Sarandos and Greg Peters now share the top spot, dividing responsibilities for content, marketing, legal, technology, and product development. Then there's private equity powerhouse KKR, with Scott Nuttall and Joseph Bay co-leading, each focusing on distinct market areas. Homebuilder Lennar has Stuart Miller and John Jaff steering the ship, while architecture firm Gensler is managed by Elizabeth Brink and Jordan Goldstein. Even in biotech and gaming, companies like Sears Therapeutics and SharpLink Gaming are adopting this shared leadership approach. The appeal of the co-CEO model lies in its ability to balance diverse skill sets and responsibilities. In industries demanding rapid innovation and broad strategic oversight, two leaders can offer a richer perspective, share the immense workload, and provide more comprehensive guidance. This structure allows companies to tap into specialized expertise while maintaining a unified vision. As more companies, from Silicon Valley to Wall Street, adopt this model, it signals a significant shift in corporate governance. It's a testament to the idea that shared leadership can foster resilience, drive growth, and better equip organizations to tackle the challenges and opportunities of the modern business landscape. Now, back to that critical TikTok deal and Oracle's surprising new role within it. We've got the latest on how Oracle will be overseeing the app's algorithm. Oracle to oversee TikTok algorithm in Trump Act deal. In a move designed to keep TikTok in American hands, President Trump has brokered a groundbreaking deal where Oracle will play a pivotal role in overseeing a U.S. version of the TikTok algorithm. This complex arrangement aims to satisfy national security concerns and prevent a ban on the popular app, ensuring its continued operation for millions of U.S. users. The core of the agreement mandates that TikTok's American business must separate from its Beijing-based parent company, ByteDance. Crucially, the recommendation software, the very engine that drives user engagement, will be rebuilt and managed under U.S. ownership. American investors are set to lease a version of ByteDance's algorithm, which will then be retrained using U.S. user data, with Oracle providing the essential cloud storage, security, and technical monitoring to guarantee the system remains inaccessible from China. A White House official stated that Oracle will operate in partnership with the U.S. government, overseeing everything from source code review and algorithm retraining to application development and deployment, ensuring robust safety and data security across the entire platform. President Trump is expected to issue an executive order detailing a 120-day window to finalize investor arrangements, board structures, and secure regulatory approvals from both Washington and Beijing. Under these terms, a U.S. consortium will own 80% of TikTok's American operations, leaving ByteDance with less than 20% and stripping it of access to user data and algorithmic control. This deal comes after months of intense political wrangling, driven by bipartisan concerns in Congress over the potential national security risks posed by the platform's content recommendation system. While the deal aims to satisfy regulators and ensure business continuity, some analysts express caution. Jasmine N. Berg of eMarketer suggests that US-only changes to the algorithm could alienate users and impact the value for creators and advertisers, potentially leading to significant shifts in user behavior if content becomes isolated from the global platform. That's a wrap on our top stories for today. But before you go, let's hit the highlights one last time. From TikTok's potential, U.S. lifeline to Oracle's leadership evolution and the rise of co-CEOs, it's been a whirlwind tour of tech's biggest movers and shakers. Don't forget to like this video, subscribe to Microsoft Sphere for more, hit that notification bell, and drop a comment below with your thoughts. You can also follow us on all our social channels for more updates. And that's a wrap on today's Tech Blitz. We saw the Trump administration inching closer to a deal for TikTok's U.S. operations with key investments from Oracle and Silver Lake. Then, Oracle itself underwent a major leadership change, ushering in a co-CEO era with Clay Magouyrk and Mike Sicilia at the helm, all while riding the AI wave. We also explored how this co-CEO model is becoming a hot trend, seen in companies from Netflix to KKR. Finally, we detailed how Oracle will be at the forefront of overseeing TikTok's algorithm in a deal aimed at securing its U.S. future. If you loved this deep dive, smash that like button, subscribe to Microsoft Sphere for more cutting-edge tech news, ring that notification bell so you never miss an update, and let us know your thoughts in the comments below. You can also follow us on all our social media platforms to stay connected. See you next time.